Is buying gold a good investment? Historically, gold has played a major role in the economies of many nations. Although it is no longer a primary form of currency, gold is still a solid, long-term investment and may be a valuable portfolio addition, particularly in a bear market. Gold was considered a universal currency for hundreds of years. Due to its recognized value worldwide, a gold standard was used as far back as the Byzantine Empire over 1,500 years ago. Until recently, in fact, gold was used as the world reserve currency. In 1944, upon the signing of the Bretton Woods Agreement, the dollar replaced gold as the world reserve currency. But even after this agreement, gold continued to be used to back up various countries' domestic currencies. However, in 1971, Richard Nixon removed the gold standard in the US and other countries soon followed. Advantages of gold as an investment. Although it is no longer a primary form of currency in the developed world, gold remains a popular investment for a number of reasons. Liquidity. Gold can be easily converted into cash anywhere in the world. Aside from actual cash, the liquidity and universality of gold is unparalleled. Holds its value. Gold tends to maintain its value over time. Economists argue that even the price of gold is not indicative of its value. That is, even if the price decreases, the underlying value of gold does not change much. This is largely because there is a fixed quantity of gold due to the fact that it is a commodity, whereas the US dollar, which is a form of fiat currency, holds no inherent value. Hedge against inflation. Gold rises in value when inflation takes hold. Since gold is priced in US dollars, any deterioration in the dollar will logically lead to a higher price of gold. As a result, during inflationary times, gold offers a much more stable investment than cash. Diversification. Adding different securities to your portfolio is an essential way to diversify and lower the overall risk of your investments. Moreover, because gold often moves inversely to the stock market and currency values, it provides an especially effective way to diversify. Universally desired investment. Gold is still a universal commodity. Although countries sell their currency futures, treasuries, and other securities around the world, unlike gold, they are subject to political chaos. Gold is used as an input in products. Since gold is used in the production of various products including jewelry and electronics, there is a reliable demand that further stabilizes the price of gold. Moreover, in times of increased demand, these markets can force the price of gold higher. Disadvantages of investing in gold. While gold can be a great investment for a number of reasons outlined above, be aware of the disadvantages before investing. Gold doesn't earn passive income. Other investments such as stocks and bonds may derive a portion of their value from passive income in the form of interest and dividends. However, the only return you can make on gold is when the value increases and you decide to sell. Gold can create a bubble. In turbulent economies, many people start investing in gold, but when investors start to panic, gold can become overpriced. This, in turn, means that your investment could lose value once the price corrects itself. Need physical storage and insurance. If you choose to buy actual, physical gold, you will not only need to store it, but you will need to insure it as well. Otherwise, you won't be able to replace it if it becomes damaged or stolen. Capital gains tax rates are higher on most gold investments. Since gold is considered a collectible in the US, the capital gains tax rate is 28%, which is much higher than the ordinary capital gains rate of 15%. That said, mining companies that don't invest in gold directly are still taxed at the ordinary rate. Increases in gold value coincide with local currency devaluation. Many economists argue that gold only increases in value when the dollar is devalued or inflation is strong. As a result, critics feel that gold doesn't offer adequate returns in other markets. When to invest in gold? The best time to invest in gold is when inflation is expected to take hold and force down the value of the national currency. The earlier you can detect such drops, the more room you have to make a profit. Leading indicators such as stock market declines and political turmoil may indicate a future devaluation of your country's currency. Announcements by reserve banks to print out more local currency can also indicate a good time to invest in gold. When the local currency is strong, and inflation is not expected, there is not much room for the price of gold to rise. With that said, if there are expectations of increased demand from markets that require gold, such as jewelry and electronics, consider investing in gold to benefit from the potential price pressure. Practically speaking, however, a buy and hold passive investing strategy may be best for the ordinary gold investor. Since economies tend to be cyclical, buy when the price of gold is down, whether or not your country is currently going through turmoil or you think it's headed for some. In this way, you don't have to worry about buying when everyone else is buying and driving the price up. What percentage of a portfolio should gold make up? There is no hard and fast rule as to how much gold you want to hold in your portfolio. This will depend on how you feel about the market, how comfortable you are with volatility, and your overall financial needs and timeline. Because gold is one of the few investments that performs well in a bear market, consider if you're feeling bearish or bullish, and use it to round out an aggressive, stock-heavy portfolio. Ultimately, you should employ the same portfolio management strategies for allocating gold as for purchasing other investments. How to invest in gold? There are many different ways to invest in gold. Buy gold directly. You can buy gold directly in the form of bullion or coins. You will then hold on to physical quantities of gold, which can be sold at a later date. It can feel good to have gold actually in your possession, but you need to be careful with it. The biggest downside is that you will have to pay to have it insured or stored. Buy shares in a gold company. You can also purchase stock in a company that produces gold. The value of the stock is going to be strongly correlated with the value of gold itself. You may also be paid dividends on your shares. Gold futures and options. You can invest in gold through financial derivatives that specialize in gold investments like call and put options. A call is appropriate if you expect the value of gold to increase. On the other hand, you'd purchase a put if you expect the price of gold to drop. Like other derivatives, gold options and futures are risky. You have the potential to earn high returns or incur huge losses. Invest in a gold ETF. A gold ETF is an exchange-traded fund that specializes in investing in a range of gold securities. Such diversification can somewhat minimize your risk. Two popular gold ETFs trading on the market are the Street Tracks Gold Trust and the iShares COMEX Gold Trust. Final word. Gold can be a profitable investment when all others fail. If you are concerned about inflation or the devaluation of your country's currency, you may want to add gold to your portfolio. That said, understand the specific gold investment you are considering thoroughly before you actually invest. For example, exactly how much will it cost you to store and insure physical gold? What are the tax differences for your income tax bracket between investing in a gold ETF or a gold mining ETF? Knowing the details can make a big difference when it comes to profitability. As tempting as it may be to buy a lot of gold in a struggling economy, try not to get carried away. Gold bubbles exist, and in order to prevent yourself from being overexposed to any asset class, you always want to maintain a well-diversified portfolio. What are your thoughts on investing in gold in a down economy? Reasons why gold is a great investment. Investing in gold is widely regarded as one of the best methods of increasing your wealth. The reason behind this is the security that comes with this investment, which is higher when compared to other investments like stocks or cryptocurrency. Although the chances of facing a loss by investing in gold are unlikely, it's imperative that you analyze the market thoroughly before making a permanent decision. Just like with other investment instruments and commodities, there are factors that have the potential of influencing price fluctuations when it comes to gold. Why gold prices rise. High inflation. When investors expect inflation to hit the global market, often pile up on gold because of how it has proven to be effective in acting as a hedge until issues subside and prices revert to normal. Studies on market trends show that inflation is a prime indicator that is considered when predicting the price of gold. While it was historically used as protection against the risks associated with inflation, gold still stands strong with a buying power that easily outweighs that of any currency including the dollar. Shift in the value of currency. A variation in the value of currencies, the USD, to be specific, has a major influence on the price of gold. The inversely proportional relationship between the value of gold and the USD makes things a little clearer. Savvy investors make wise decisions and acquire gold when the dollar is expected to weaken. This investment helps in safeguarding the market when the value of commodities and currencies take a hit. Political and social instability. Countries that go through a political crisis or social instability will eventually face negative consequences in the shape of a deteriorating economy. It's another reason why investing in gold is seen as a shield against the problems associated with a fluctuating economy. Hence, in light of recent events, it's safe to say that securing a financial asset such as gold is your best bet to survive unfavorable economic conditions. A fall in stock prices. Gold prices are known to surge following stock market crashes. This is because investors try to buy up as much gold as they can in response to the crash. Why invest in gold? Are you still not convinced about the value of investing in gold? Well, experts at the Regal Assets Gold IRA setup explain that there are many reasons why gold investment is an excellent financial strategy. They provide consultation services to their clients in order for them to make the right investment when the time is right. If you are considering investing in gold to benefit from short-term investments, there's no need for you to personally undertake the process of buying it. Their services are sure to help in diversifying your range of investments to a greater extent. With their expertise and professional guidance, you'll make investments in the gold market with some leverage that is provided to you by your broker. It's worth adding that while a long-term investment in gold means lower chances of risk, the opposite can be said for short-term investments. To make the right decisions, you need to choose consultants who help you make decisions based on knowledge and rigorous analysis of the market.